Well, hello everyone. Welcome back to the channel. So I'm back here again today with you all with a very carefully prepped, carefully rehearsed, and carefully hand selected topic today. The Fed rate announcement. So I titled the video, "Will the Fed decision yield us massive dividends and returns?" And that was in hopes that we might see a rate cut. I actually didn't think we would see a rate cut so soon. We just started the year after all. Um, but anyway, the decision actually, drum roll, was that rates are staying unchanged. So as the headline on Yahoo Finance says, rates are staying at like 20-year highs. So there's no rate cuts yet. And what they've said, and Papa Powell hasn't started speaking yet, but I would assume that the markets may turn around. We've seen that a lot when he starts to speak, the markets turn around. So he might, him speaking might help the markets turn around. Like right now we're down in the S&P. Let me just go to Yahoo Finance, get us a visual here. I'm actually I'm watching Charles Payne on Fox Business, one of my favorite business shows. I'm not too much of a fan of most of the talking heads, but I do like his show. Okay, let's see. Yahoo Finance. Here we go. Okay, so we're actually way down today in a lot of the major indexes. The S&P, we're down. Hold on a second. Why am I not sharing? I'm still on this piece of crap MacBook. Okay, hold on a second here. Oh, come on. Oh, that's Discord. I saw the little. Oh, there we go. It's just it's just moving really slow. Anyway. Okay, so we are live in the voice chat in the Discord. Let me scroll down here. Okay, we'll just stay live. Let's see, 3-year Treasury yield. Oh, they showed it down today. It looks like. What's this thing called doom spending? So they're talking about. I'm actually watching Charles Payne here, and they're talking about like doom spending by demographic. That's something that I may have heard like once. Okay, let's see. Oh, there's AMD on the ticker board. We're down $3.54. All right, let me go back here. Hopefully this piece of crap will cooperate with me. By the way, okay, here we go. All right, so wait a second. Where is it? This thing just. Okay, the S&P is down. It's actually come back just a little bit since we've been talking. Maybe I'm a market mover after all. Not. We're down 49.68, down 1.01%. The Dow is down. The Nasdaq is down 1.5%. The Russell is down 0.81. Crude oil is also down. So yeah, the rates are steady. I think really the good news is that we're not increasing further, but I think that what they've said is that they want to see the inflation obviously come down to their target rate of 2%. The unemployment numbers look healthy overall. I mean, we've got a low unemployment number, but there are some things with the job market personally that I've seen. Like I know of a lot of people that have had a hard time like finding work, and I just find there's something just off about. I know the unemployment's in like the 3% range, but it's strange that if we had such a healthy job market, it shouldn't be such difficulty to find good work. So just seems like something's off. Anyway, okay. So there's that. Obviously, the big announcement. We'll have the unemployment news Friday. So since 2001, I said 20 years. It's actually been 20, almost 23 years. The interest rates are at the highest level since 2001. Here's our market check again on the screen. S&P is coming back a little bit. We're under 1% down now. Nasdaq. If I can show you guys a little bit. So my TV is actually right over there. That's what I'm watching. When I started as a YouTuber, I actually used to do videos in front of the TV. I was hoping when I started, like as they say, set the bar low, so that the lowest you set the bar, you want to start the bar at the lowest. That way there's only one direction you can go, which is up. So, okay, let's look at, while we're at it, let's do some quick stock searches today. Tesla, let's see where we are with Tesla. I don't think I'm going to go until, oh, what's this one? Hold on. I'm not going to go until he starts speaking. Have any of y'all heard of this TSL? It says Granite shares 1.25x long. I'd probably stay away from that. All right, let's look at Tesla. The Russell 2000, sadly, is below 2000 again. I'm tracking that a lot closer because I have positions in it now. I have the TNA fund. Dang, this lady's got some big glasses on the show here. It's like granny glasses, and she doesn't look that old. All right, come on, Tesla. I will be back to the desk very soon. This thing, you all see how slow this is. This is crazy. All right, Tesla's down again. That means we're back down again. And Tesla, we can always be assured that we're going to be down when when Tesla, what the heck's going? Oh, the comments are over here. I moved my phone. I moved the phone over here. So the comment bar is on the side. Anyway, so Tesla's down. All right, let's see. So we'll look at Tesla real quick. Dang, this lady's outfit is loud. Check this out over here. Oh, they just panned away. Well, in 3 months, the Russell 2000 is up 20%. That's pretty good for 3 months. Okay, so Tesla is back below $9 again. Some of you all may think that's a buying point, but hey, it's still a 77% dividend payout. I should just, I need to get back to crafting thumbnails again. I should just put 77% in big font in the thumbnail. Let's see. Winners today for S&P, Stryker, Core, Paramount, Edwards. Oh, they took it away too fast. The biggest losers today, Google is down pretty significantly. Anyway, I would, if I was at my desk, I would cover what Papa Powell says. But as far as, the high level, so they're saying, inflation has eased over the past year. You wouldn't know it. Believe it or not, since the start of the year, I've seen stuff go up even more. Fast food stuff. I've seen some of my stuff in the work cafeteria. They just raise. So things just keep going up. I feel like that happens, though. Normally, it's like the New Year's price increase. But anyway, they're saying they like the direction that inflation is going. I can't say I do, but they do. They want to get it to the 2% target rate before they start cutting rates. Strongly committed to returning 2% inflation target. So we're staying flat. Oh, here he comes. Here he comes. All right, you guys are in for a bonus. Now, I do think I'm actually 30 seconds behind because I had to rewind because while I was watching business news earlier, I heard someone say something so outlandish. I had to go back and find out what was up with that. Anyway, you'll hear the audio.
The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not.
You know what else is too high? The rent is too damn high.
I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace.
Let me know if y'all can hear it, okay?
GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%.
We'll hear more about GDP growth than inflation this year.
Conditions. Activity
Gotta love the media.
over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job
almost
creation
4%.
has been accompanied by an increase in the supply of workers. The labor force participation rate.
I'll put up some comments here real quick. We got a few. We got like 18 of you on. That's cool for a video like this. How we got a howdy. Blake is on. I'm eager to find out what the Fed is planning on doing. Yeah, we're all finding out together here. Thanks for your content. It's great. Well, thank you. You all are the best part of being a YouTuber. Let's see here. The Fed began cutting rates ahead of inflation back in the 70s. It caused a massive inflation spike. Volcker had to step in and fix the situation. That's true. I figure they're about to make the same mistake. Yeah, we'll see.
Rose 2.6%.
Oh, you're referring to, well, no, I think what you're referring to would have already happened because Volcker, he raised rates aggressively, which is what they've been doing over the last like 2 years, right? So that caused the recession in the 80s, the early 80s, right? I think that would have already happened if I'm not mistaken. But correct me if I'm wrong, but I think if that was the case, that would have already happened.
Term inflation.
Unless you're saying that if we cut again, we'll go back to like a 70s hyperinflation. God, I hope not. Price is already too high as it is.
Measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials.
Looks like he's got a little teleprompter under his thing. He's got like a laptop he's reading from.
Poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective.
And I'm strongly committed to daily uploads now.
Policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
So there we go. That was important what he just said. At this year, he's talking about dialing back policy restraint at some point this year. So we should still be on target for some cuts this year. Let's see what we got here. Before Volcker, they raised, then they began lowering too early. Then Volcker had to show up with his cigar and jack rates to fix the previous mistake. So, but when he did that, that's similar to what we were doing the last like 2 years. And that should have caused a recession like it did in the 80s. So I don't see that happening. I think we're actually past that point now. We had the soft landing, as they say. S&P is up 17% in the last 3 months. So he's saying the rate is likely at its peak. Yeah, we kind of figured that because they've been flat for the last few months, right? So in 6 months, the S&P has gone up over 800 points from the peak to trough, as I call it. 1 year, 21.51%. We're up over 1,100 points in the S&P year over year. NASDAQ got crushed a little bit this week. Pretty cool. I can just memorize all this stuff, right? Not just like read it off of a screen. Actually, that's what I'm doing, if you couldn't tell.
We will continue to make our decisions meeting by meeting. We remain committed to bringing
NASDAQ over 3 months is up 20%. If they're just showing it on the screen here. I feel like a politician going back and forth, like teleprompter here, read. I don't have a teleprompter. I'm just reading the TV screen. But 6 months. Wow. November would have been a great buying point for the NASDAQ. In 1 year, we were up 35% in the NASDAQ. Wow, that's phenomenal. Imagine some leap options on the TQQQs. Actually, there's so much volatility with those. The leap options don't work quite as well as leaps on individual stocks. But anyway, all right, that's the gist of it. I'm going to end it there. Thank you all for tuning in. Like, comment, and subscribe, and we will see you all later tonight. Take care. Oh, watch the podcast too, by the way. We got our interview with Jay Nagy. Check that out. Thanks, you all. See you soon.